Morning, everybody. Happy Friday. Today is January 31st, and the deadline for payroll taxes to file your W-2s and 1099. So I hope everybody was able to get it done. We have been stressing and trying very hard, and I think I have all my clients filed. Um, just a quick topic about that before we move into what I actually want to talk about today. But um, you know, payroll taxes are treated different than income taxes, so there is a slightly different penalty and interest associated with that. Most of my clients don't have any traditional employees. They're all single member LLCs, taxed as S corporations, and as such, they are employees of their own company and they have to file a W-2 for themselves. Pretty much the only W-2 that's filed. So the majority of the payroll taxes that are due, FICA taxes, or otherwise, or Medicare and Social Security tax that is due is usually under $10,000 for the biggest clients. Um, if you do not to, if you do not pay today, so it's easy to file. Like you calculate it, you file it, you meet the deadline, you don't get a failure to file penalty. Failure to file penalties are significant, so we make sure we file on time. The actual taxes due, because they are not income taxes, they are considered what we call trust taxes. Basically, and this comes to regular employment law. So just because you're a single member LLC and you are your business and you're running a W-2 for yourself does not mean the law changes for you. You are still subject to the same law. And so the way this law is written, it says that this money is not yours. This is not your taxes. You are holding this money in trust for your employees. And as such, there is some different interest and penalties associated with it. The largest penalty or interest, whatever word you want to use, it's a monetary thing. So call it interest, call it a penalty, whatever, is 10%. And then I think that comes out if you go more than 30 days without paying, uh, you can be charged up to 10%. Um, a lot of times I see that get forgiven on small employers, uh, usually pretty quickly. So if you pay your taxes even within 30, outside of 30 days, and you just typically like we'll bump it up $50 or whatever to cover some insurance. And usually those clients get a letter within 6 months that says, hey, we didn't charge you the penalty even though you were subject to it. But yeah, so like yeah, even if you owe $10,000, if you wait over 30 days, you could get charged $1,000 penalty or interest because it's 10%. So just keep that in mind. Better to pay sooner than later, but not everybody has the funds available. But typically, our strategy is that you have profit in your S corporation, so there's a step down to wages, and then wages calculate payroll taxes at 15%. So you have two step downs from your profit to actual FICA or Medicare and Social Security tax. So just keep that in mind. But anyway, what I really wanted to talk about today is the home office while you are a single member LLC taxed as an S corporation or even a multi-member really like but we're talking about the home office when you're an S corporation. So very quickly, by default, by definition, an S corporation cannot work from home because this is the biggest thing I see people struggle with when it comes to um, running their business because most single member LLCs they are their business. Like if you disappeared, the business is gone, right? Whether you're a real estate agent or a CPA or an engineer or lawn care or a doctor or um, a welder, construction contractor, whatever website designer, like if you are a single member LLC and you are your business, it's very difficult for us to understand that you are not your business. in business law, you are a shareholder and you're an employee. Um, and a corporation, because of that definition, cannot work from home. Period. Like it's a piece of paper. It doesn't have a home. A sole proprietorship can work from home, and there are specific tax forms to make a home office deduction. But an S corporation, by default, cannot work from home. It has no home. It's a piece of paper or something in the digital world, right? Like it's not a real physical thing, but it has to hire a physical person to operate it. And that person needs a place to work. So a lot of times, single member LLCs, their employees work from home. And in employment law, a company is required to reimburse its employees if they work from home. So I don't know if anybody was paying attention, but right after COVID, there were several lawsuits filed for violation of employment law because people were forced to work from home and corporations were not reimbursing them to work from home because now you are working from home, you're paying for increased electricity and more bandwidth on your computer or your internet and all that stuff. And so employee law states that corporations, if they force their employees to work from home, are required to reimburse them. Well, what does reimbursement mean? And this is how we have to actually treat S corporation shareholder owners and employees that work from their own home. And this is a very nitpicky cross the T, dot the I law if you want to take advantage of the tax savings. So phone and internet are 100% business. Like your business cannot run without phone and internet. So your phone and internet bill are 100% business. Every other living expense you have associated with your home is personal. You pay for it out of your personal bank account. There is the corporate veil there, and you do not cross that. There is an extremely high risk if you cross that you will have your S corporation election revoked. Because you are not operating like a corporation, and there's legal and tax issues with that. But that includes a rent or mortgage payment, property taxes, insurance, your standard utilities, power, water, natural gas, all those things. HOA fees, repairs and maintenance, lawn care, pool care. Like there's all these different expenses associated with your home. They have to be personal expenses first. Then your corporation reimburses you for use of your home. And there are different ways we can interpret that. I typically recommend to my clients that we still use the home office deduction rules merely because it gives us law or IRS regulations that we can fall back onto for audit. So we can, even though it's not a home office deduction, we're still following the home office deduction rules in order to have an argument or negotiation power with the IRS. Technically, what should be happening is the corporation is paying you rent, and then you should be declaring rent income and then take all those expenses on a Schedule E rental. Now, different CPAs have different opinions about that. I tend to take a more aggressive stance that it nets to zero, so the IRS can't actually penalize you for that. There are some arguments there. But to me, it's more of a cost to benefit. Why pay me to do a rental schedule for you when it doesn't benefit you any? There's no tax savings because I did it, because the tax savings is built into the corporation and it nets to zero. You take an expense in the corporation and then it nets to zero on the rental schedule. So I don't charge my clients to do that because it's a cost to benefit. There's no benefit, so why pay the cost? But those are some of the things you have to take into account, and that's why it's so important to make sure you're paying your living expenses out of your home, because a corporation legally has to reimburse you for utilizing your home as office space. That's the law. Now, you could interpret that to even be more aggressive. Um, there's things like the Augustus rule that you can look at. There you could claim that the corporation is using more of your home than what the home office deduction rules would allow, or less. I mean, it could go either way, but there's a lot of room for interpretation in that realm so that you can be more or less aggressive on the home office deduction. But what's also nice about it is the S corporation can't report a home office. What do I mean by that? So, in a sole proprietorship, there's a specific form you file called the 8829 that tells the IRS exactly how much of your home you are using for business purposes. Um, if you claim 90% of your home for business purposes as a sole proprietorship, there's a good chance you're getting audited. The IRS doesn't think that you're capable of using that much of your home. I can tell you, I have clients that are doing that, but we're doing it through an S corporation. So as an S corporation, it's just rent expense. There is no specific form that tells the IRS the location. I mean, other than the address on the tax return, it doesn't say like, hey, this is how much of this building we're using for business purposes or otherwise, because by corporate definition, a corporation is going to utilize whatever office space it can get for business 100%. Now, how can I take 90% in a corporation and make that argument and still use the home office deduction rules? Well, examples are online retail, or really retail anywhere. It just depends on where you're selling and what you're doing. But I have clients that are importing goods for retail, and then they're using their own home for inventory storage. So their house just became a warehouse. So we can make more claims. I also have a lot of clients that are content creators online. So like blogs and YouTube and whatever, right? Well, I fall back onto, I like to look at, my wife used to make me watch The Bachelor every now and then. Well, there is this house that these people are living in, and guaranteed that Hollywood studio is writing off 100% of that home. It's a traditional home that's probably been modified for things, and people modify their homes for their businesses all the time. That's very common. So it's probably been modified to meet the role, but guaranteed they're writing off 100%. So I say 90%, even though they might be making content in every single room, or doing different things in different part of the rooms, or storing equipment or whatever in different parts of the house. I'm still going to say at least 10% of your home's got to be personal. So that's the way I'm conservative, I guess. But anyway, so that's the point that I wanted to make today, is that an S corporation cannot work from home. And so that's why it is very important that you cross your T's and you dot your I's. Otherwise, we can't make this argument. And so your corporation cannot be paying your rent. It can't. Like if the cash goes from the business bank account to the mortgage company or to your lender or your landlord, you're violating the rules, and you have a very high risk of having your S corporation revoked and significantly increasing your taxes. We pay for our rent out of our personal bank account. So you transfer a dividend from your business account to your personal account and pay your rent. And then we calculate the reimbursement that your corporation is paying you for that rent. It's kind of nitpicky, but it's how the regulations are written. And when we understand the rules, we can apply the rules to our benefit. And that's what we're able to do. But you do have to cross your T's and dot your I's. So anyway, I hope this video was helpful. Have a great weekend and see you next week.